Wealth Secrets for 2025. Following two very good years for equity investing, 2025 promises to be a very challenging year. Investors should always know what to do in a challenging year. Importantly, an investor must know what not to do in a challenging year. Investors must be ready to do what others are generally not willing to do. Every investor needs to be prepared adequately for such a difficult year. What makes this year so difficult? First, we are getting ready for a phase of lower growth, higher global volatility, stronger dollar, and weak exports. In such a situation, every investor needs to prepare himself adequately. His portfolio must reflect the preparation which he has done for such a phase. In my view, consensus worked very well in the last few years. Buying popular sectors yielded tremendous results, but that phase of investing may well be over. So you need a different set of ideas, a different approach, and a completely different investment playbook. Firstly, you must be ready to buy out of favor asset classes. Now that's a difficult thing because today almost all asset classes are still in favor. You had a good run in gold, silver, you had a very good run in equities. Real estate has been extremely favorable. So the only asset class which has been out of favor is debt. So if I say buy an out of favor asset class, it means you must possibly buy some amount of debt. This would help you to invest whenever the markets correct, and you will always be in a state of readiness to invest when you find new opportunities. The second important thing to remember in 2025 is buy hated sectors in equity. There are some sectors which market simply doesn't want to buy, like banking or like consumer facing businesses like FMCG. Some of these companies could eventually present some very interesting opportunities in the course of 2025. If they fall further, they could become very interesting. So an investor should be ready to buy some of these hated sectors. Switch from small caps and micro caps into large caps. Portfolio stability is very important, so you should reduce your exposure to overvalued companies, and predominantly one finds more overvalued companies in smaller companies and in micro caps and in some mid caps. So you need to switch out of these companies into large caps and buy businesses which could fall less whenever the markets correct. The fourth, another important thing to remember is to keep some cash ready. Whenever the markets correct, you should have money to invest. So keeping cash ready will be extremely helpful in ensuring that you invest whenever the markets fall. The fifth point is to lower valuations in your portfolio. Essentially, if your portfolio is full of expensive growth stocks which are discounting very far into the future, it may make sense to sell some of these expensive stocks and buy some value stocks which also have excellent growth prospects. So within a portfolio, when you sell very expensive stocks and buy relatively cheaper stocks or stocks which are attractively valued, you can lower the overall portfolio valuation. And if you weight stocks which are lower in valuation adequately, you could reduce the overall valuation of the portfolio itself. And that's something you should want to do now. There are times when you must be contrarian. I think 2025 is a year when being contrarian would be hugely beneficial because the market is extremely consensus driven. It does not want to move out of consensus. So a contrarian has a field day in buying businesses which the market doesn't want to look at. And that's essentially something that you should consider because you could find some great ideas in a few sectors which will make your investing outlier in the year itself. So look for contrarian ideas, be contrarian. The last point is the most important point, stay patient. What investors lack today is patience. Everyone is in a tearing hurry to make money. Everyone thinks that you invest today and make money within a week or a month. No one is thinking long term. But this market will belong to patient investors because if there is a correction or if there is a sideward movement of the market where it does not go up at all, indices remain sideward but stocks start falling. This is something we are seeing this year itself and you're going to see it more in 2025. So if you see the headline indices going nowhere but individual stocks going down, you could see your portfolio slipping in the red. And it's important for you to be patient. So 2025 promises to be a very different year from 2024 and investors need to be in a state of preparation and readiness to face such a year. The 7 points that we mentioned in this video are very, very critical and I'm going to recap them. First, buy out of favor asset class, which is debt. Second, buy hated sectors in equity. Third, move into large caps. Fourth, keep cash ready. Fifth, lower portfolio valuations. Sixth, be contrarian. 7, stay patient. And if you do all these 7, you could be an investor who handles 2025 far better than your peers or anyone else in the market. That's something you must want to do and you must try to do. Thank you for watching this video.